Okay, very good. We're all here. Now, I think this is a nice parallel from one of the sessions yesterday on asset liability management in the context of Islamic finance. As was mentioned, the liability side of the balance sheet is quite easy. In many cases, the deposits come to the Islamic Bank without any cost at all. But very soon, the treasurer has the issue of deciding, how to source the appropriate mix of Sharia-compliant assets. And sometimes, depending on what country you're operating in, the choices on offer can be a bit scarce. So we have, today, we're fortunate to have 4 fund managers who manage funds of various asset classes, short-term, medium-term, investment grade, all types of characteristics to their funds. So I think we've had a number of very interesting presentations in the morning session. Let's try to make this one as interactive as possible. So I think what we'll do here for the format is we'll have each of the gentlemen introduce themselves briefly, if you can, introduce the fund that you're representing, and then we'll just open it up to question and answer until the end of the session. So if I could first bring to Mr. Lim from Hilal Bank in Abu Dhabi. Perhaps if you could join me in welcoming him, and then Lim, if you could join in from there.
Good morning, ladies and gentlemen. So as not to confuse you, this Hilal Bank that I'm representing is not the sponsor of this conference. Hilal Bank in Abu Dhabi is owned by the government of Abu Dhabi. It is a full Sharia compliant bank. My name is Lim. I'm a Malaysian, and I head up the investment banking for Hilal Bank.
Perhaps you will say a few words about your Sukuk fund, some of the thinking behind it, what the bullet points.
Hilal Bank is a relatively new bank. We are about 4.5 years old, and the asset management activities are even newer. We started asset management in 2010. In 2011, we launched our first fund, which was then an equity fund investing in the GCC region. And early this year, we launched our second fund, which was a Sukuk fund, a global Sukuk fund. And obviously, the whole thought behind the creation of a Sukuk fund went all the way back in 2011, because you need time to develop those. So what I can do now is to share with you the thought processes, the thinking behind why we decided a Sukuk fund, not a real estate fund, a commodities fund, or any other equities fund. Way back in June 2011, when the team got together for a brainstorming session, we were looking at themes, we were looking at words in terms of what are the words that come to our mind for the funds that we would like to develop and offer to our clients. Among the words that came to our mind were, number 1, Sharia compliant, number 2, ethical, number 3, social responsibility, number 4, meeting needs. Simple as that, just 4 words that went around. And then these 4 words eventually developed into the idea of promoting, developing a Sukuk fund. Now let me explain this. As an Islamic bank, one of the things we are supposed to do, and indeed we want to do, is to promote social responsibility in terms of investing and financing, besides ethical investing and ethical financing as well. So what do I mean by that? Now, we know clearly that of all the asset class, the one that is probably most stable would be Sukuk. That was our view back then, because we knew then that equities was always going to be very volatile, given what's happening around the world. Real estate in the UAE has been very bad since the collapse in 2008. It hasn't really fully recovered. Commodities are very difficult for Islamic investing because typically commodities are invested through futures, and you know very well in Sharia compliant, Sharia will never allow futures to be traded unless Dr. Daud Bakar agrees. So as a result of that, Sukuk seems to be the most optimal asset class to be offered to the client. Now, when I say social responsibility, if you understand the Sukuk market, the size is, the minimum amount to invest in Sukuk is very large. Typically, you need either 100,000 US dollar or 200,000 US dollar to buy just theoretically one piece of that security. Now, not many people can afford to put in money and buy those. But yet, there are large segments of the population that is in need of such an investment. So we felt then that we have to act in a socially responsible manner. And what we did was, when we do a Sukuk fund, we have the critical mass, because we have the pool of funds, which allows us to buy either from the primary market or from the secondary market. So we create a pool of funds that consists of 17, 18, 19, 20 Sukuk, and we unitize it into an amount which is very small. So for our fund, the minimum entry is only 10,000 US dollar. All right, so when I make it to 10,000 US dollar, then I'm catering to the larger mass of the population. Now, that's one part of the social responsibility. Now, the second part of it is that Sukuk, as you know, pays the coupon, profit rate. Now, most funds do not pay that profit rate to the clients. What most funds do is they reinvest those profit rate back into the fund. But we have decided that 100% of the profit rate or the coupon of the Sukuk will be disbursed to the investors at the end of the period. So in this way, we are not holding anything back. And the challenge is for the fund manager to get an alpha through the performance of selecting the right Sukuk, not through the coupon that's been paid by the Sukuk. Now, the third thing we did was we reduced the fees to make it cost-effective, to make it economical, because we know that the return from Sukuk seldom goes beyond 10%. So as such, we don't want to charge fees which are exorbitant. Now, what we did was for the subscription fee is only 0.75%. Now, I'm sure if you look at funds around the world, this is a very, very low entry cost. On top of that, management fee is only 0.85%. Right? So the questions that people normally ask me is, what's in there for you if you are selling everything so cheap? Right now, Hilal Bank, as I said, is a new bank. Our target is eventually to build ourselves into a major fund house through assets under management. But we don't believe in growing overnight. We don't believe in achieving everything overnight. So we are in for the long haul, and we believe that reputation is far more important right now for us than the economics of it. As long as the funds cover itself, we are fine if the revenue is not great for the bank perspective. So what's important is to be able to serve our clients as effectively as possible and in a social responsible manner. So that's in a nutshell some of the thought process and thinking behind a Sukuk fund.
Okay, thank you very much, Lim. And now to another relatively new bank. Dr. Idriss, if you could tell us a bit about your bank and as well the new fund that you've been working on for the last few months.
Thanks, Mark. Basically, I'm the CEO of Quantum Investment Bank, which is a relatively new bank. It was established in Dubai. For the purpose of this session, I was thinking to maybe introduce something slightly different from what we see in the market. And for one simple reason is that the main strategy driving Quantum Investment Bank was innovation and differentiation. So maybe the fund that I'm going to introduce today, I would say, is quite unique for the region, and you won't have many funds competing around the world for that. To introduce that, maybe I'll take just a few minutes to build up a story. Unfortunately, after 9/11, we all know that security became a big issue for a lot of countries, and particularly in our region, with all what we see today, especially what happened after the Arab Spring, etc. So security became a major priority. And when we talk about security, this can go from securing your airports, your borders, securing power plants, and other vital infrastructure. Of course, the days where this used to be done via armed people are gone, and today we're using technology. So basically, technology is the key element in today's security world. Of course, our countries, given the geopolitical situation, are even much more sensitive to this actually area, and that was the driver behind getting, for Quantum's perspective, getting into this sector. So today we've started thinking about doing something into this area like a year ago, and we had some very good contacts around the world with people specialized in the security industry. Of course, after doing our due diligence, we found out that the main market for companies who are developing technology for security application was the North American market. However, most of those companies, given the huge disparity in terms of government budget allocated for security, they were almost exclusively dealing for the U.S. government or for U.S. large corporations. With today's, of course, budget deficits in the U.S. and all what we see in terms of cuts here and there, a lot of these companies were looking to go abroad and open new markets. And this is where actually we thought there was an opportunity if we can choose the right business model and the right partnership. So we've partnered with some very strong fund managers who had a long experience with that, and together we brought to our advisory board quite well-known and respectable people who would help us in actually developing that business. I would mention, for instance, on the advisory board of our fund, we have Secretary James Baker, who was the former Secretary of State of the U.S., and Secretary Frank Carlucci was the previous Secretary of Defense. So basically, the fund that we're talking about will go and take majority equity positions into technology companies that sells technology used for security application, and actually help those companies to go abroad and to open new markets. Let me here maybe give an example of what sort of companies are we talking about. As you know, just like a month ago, Saudi Aramco, who is maybe one of the largest oil producers in the world, faced a cyber attack on their IT infrastructure. And talking to some people familiar with the story, they literally said that we were very, very close to shutting down the entire Aramco production operations that day. That you can imagine what sort of consequence this would have brought to the markets. So you can see that today for certain industrial infrastructure, you need some specific solution and very reliable solution to make sure that your production is not cut off. So some companies are specialized for that, for instance. And this is one, for instance, of the target companies that we're talking about. Another company which we've already invested in is specialized in providing solutions for crowd management. And crowd management, you might know that, for instance, Hajj was like a few weeks back. And you can imagine that officially they said 3 to 4 million people located in one place and moving together in one place. It's already a miracle that you don't have a lot of accidents. So you have companies who are developing IT solution to simulate the crowd movement and helps actually the security people to manage the crowd in such events. So we can also talk about, for instance, some specific IT solution to secure your power plant infrastructure, for example. So these are the type of companies which we target. Obviously, the main motivation for us for doing such an investment can be summarized in 3 points. First of all, this is a complete diversification from what we see in the private equity market in the region, to my knowledge, and unless my colleagues would say the contrary, but I haven't seen a similar fund. Secondly, there is here a very strong transfer technology effect to the targeted markets, because we're talking here about a new technology which is not available currently in these markets, and there is a genuine transfer of technology by creating local joint ventures. And thirdly, of course, the targeted return that we see in this sector are far higher than what we see in the normal private equity transactions. Obviously, I mean, this is not a Sukuk fund, this is not a commodity fund, so we're talking here about more a strategy of let's say, a 5-year average life, not necessarily with sort of like intermediate distribution or profit distribution. but definitely with a very, very strong IRR. And given that we're targeting mid-cap companies, so we're not talking here about venture capital or startups. These are already established with stable cash flow companies. This is in brief about the fund, and any question would be welcome. Thanks.
Okay, thank you very much, Dr. Idriss. Moving down to Brian Luck. Brian, your firm is maybe perhaps a little bit older, but I think the branding, brand new for sure, Asiya. If you could tell us perhaps in 5 minutes a little bit about Asiya and a little bit about this excellent fund we've been working on for the last few months.
Sure, thank you very much, Mark. Good afternoon. Asiya Investments, we are an asset manager basically that invests in Asia. All our investing is done out of our offices in Asia. We are backed by a Kuwaiti company, Kuwait China Investment Company, which is part owned by the Sovereign Wealth Fund of Kuwait. We were set up specifically to invest in Asia. That's the only thing we do. I am based out of our office in Dubai. We really are here today to talk about solving a need, and Mark mentioned it in his introduction. I've been working in and out of the Gulf for Arab firms for about 15 years now, and in Islamic finance for some of that. The real problem that Islamic finance hasn't solved yet is there is a lot of demand for income products. There is a lot of capital that wants to go into lower risk with a steady income. Yes, you can do it in Murabaha for cash rates. You make less than 1%. You can do it with Sukuks, but I think everybody in the Sukuk market knows there is more demand than supply. If I take you back, in 2002, I was working as head of asset management at National Bank of Kuwait. We had a similar problem. We'd set up a money market fund doing Islamic money market. We'd set up a Islamic equity fund, and we needed something to put in the income bucket. We joint ventured with a group in the US, and we set up an Ijara program. I can tell you the first fund took a lot of setting up and a lot of convincing people that it was going to be successful. But now, today, that is a $3 billion investment program, and they face the problem that there is not enough assets for the demand. When we were looking about a year ago to increase our product range in Asiya, we started to look at trade finance. And by trade finance, I actually mean the business of financing trade. This is basically physical commodities moving around about in Asia, being transformed into very simple products. It's a big market. It's mainly a banking market. But banks are pulling back from the market. So there is an opportunity for other people to finance trade in the region. Trade is very short term. Mostly we finance deals that last about 90 days. I think the average of our book at the moment is 77 days. It's between primary producers and producers of very simple products. One example we give is a surgical glove manufacturer in Malaysia. They take about 65 days to buy latex from Thailand. They ship it across to Malaysia. They turn it into surgical gloves, and they sell it to Johnson & Johnson. We're working with a firm based in Singapore that has been doing trade financing of those deals for about 7 years. When I saw it, I thought, well, the underlying here is physical. There is very much not much risk. We only lend to people who we know very well and who are very strongly banked. We take title over the commodities, so we have no risk that way. We only deal in deals in which we've agreed the price we buy the commodity at, and at which we sell the end commodity if we're only just trading the commodity when we ship it across the world, or if it's turned into surgical gloves, we have an offtake agreement with a big borrower. And essentially, we've wrapped that up into an income fund. It's a very low risk. It pays roughly about 5 to 6% on an annual basis. You can, because the underlying nature of the deals are very liquid, it's quarterly liquidity. You can come in on a monthly basis, you can come out quarterly. We will pay out profit rate every 6 months. It's all in US dollars, there's no currency risk. It's a very safe, standard program. We were a bit surprised to find that it's the first one of its kind. We did go to our friends here to ask them, is it Sharia compliant? And to be honest, with the underlying being physical goods, with it being very simple trade process, with there being no fancy borrowing involved, nothing that has to be made Sharia compliant that isn't already Sharia compliant, it's been a fairly simple process. I'm here today because we're starting to talk to people around the region. We opened the fund, we got our fatwa officially 2 days ago. We opened the fund for investment, and we're starting to talk to people. I think what we're finding is that, rather like I found with the Ajara program, it meets a need. There is not enough supply of Sharia-compliant Islamic income-producing assets. This fund, the conventional fund they've been running for the last 7 years, these are not mark-to-market assets. They're very short-term. They amortise to maturity. There's a known profit rate. The volatility on a monthly basis is less than 1%. I think it will find good demand because people will be able to say, well, where in US dollars can you get Sharia-compliant income of 5 to 6% after all fees without having to lock up your capital for a long term? Where can you get that with quarterly liquidity? Where can you get that with strong backing? I don't think there are many places. I don't think we compete with a lot of other asset classes. I don't think we compete with other trade finance funds because, quite frankly, they tend to be money market funds. They're not in the business of financing trade, and we finance trade. That's why we can pay 5 to 6%.
Okay. Well, thank you very much, Brian. Excellent. And our final panelist for the day is our own Mohamad Damshal. Damshal, if you could tell us a little bit about the thinking of why we formed the Amanie ACA, perhaps who some of the partners are, what the real strategy is and the vision, and perhaps a few words about your initial fund, and then we can open up to questions for any of the 4 panelists from the audience. 4 or 5 minutes, if you could.
Assalamualaikum warahmatullahi wabarakatuh. ACA-Amanie is a full-fledged private equity, and our partner, ACA, is actually Asian Capital Alliance out of Japan. It is actually 39% owned by Sumitomo Corporation, and the rest are owned by the employees. And asset under management currently is about $1 billion US. Our focus is very much now is on matching fund. Although ACA is actually from Japan, we have a very strong technology and funding partner from Korea, as elaborated by my colleague yesterday, Mr. Robert. And this matching fund is an interesting fund that we have already initiated out of Malaysia. Again, as elaborated by Mr. Robert, it is actually an SME fund where 2 sovereigns, which is Malaysia and Korea, has contributed 50% each into the fund. And on top of that, not just the fund, the technology partner from Korea will also be paired or matched or will be paired with the local SME players to provide not just technology but also equity into the SME in Malaysia. So in other words, for $1 or 1 ringgit of equity brought by the local partner, actually he received $3, $2 from the fund and $1, at least $1 from the technology partner. So we are leveraging on equity, not debt. We are leveraging on equity so that the access to capital market is better. So that is the SME example that we have, but I would like to highlight 2 things. One is the collaboration that we just did here. We have just signed MOU with our partner, Al-Manila Investment. We believe that the matching fund that we have in Malaysia, the SME matching fund, not just on the SME sector, I can mention another sector, but the structure that we have can be replicated into Oman, because it will definitely expedite the development of the technology, one, and the development of the financial market. So the MOU is very strategic to us because we believe that Oman has great potential, not just on the funding side but on the investment side. So if you look into the project, the proper theme of my presentation is actually on renewable energy. Actually, we on this private equity that we have, we focus on 3. renewable energy SME in infrastructure. And we have good technology partner from Korea that could provide this technology and equity support. Why Korea? Because we have good technology in Korea, but it seems that the market is already saturated in Korea, so they need to move out of Korea, and they found that GCC is a good market, including Oman. And then on top of that, the support is not just from technology from Korea, but we have soft commitment from development banks out of Korea, few development banks of Korea, to soft commit into the fund so that the access to capital market would be better. So going back to renewable energy, why renewable energy and why Oman? So we believe that we cannot rely on hydrocarbon forever. So renewable energy should be the answer. Give you the let's look at GCC for example. If you notice that GCC, the whole countries in the GCC are all members of the Kyoto Protocol. All. If you look into other countries, even US has not ratified the Kyoto Protocol. Canada has withdrawn. Even Japan itself. Japan, where the Kyoto is reducing its commitment. And why Oman again? Because Oman is the only country in GCC has its own dedicated Ministry of Environment. And he has structures, framework that ready for renewable energy. Okay, now for the commercial side, we believe that Oman can treat renewable energy as part of its diversified economy beyond hydrocarbon. If you look into the demand and supply of electricity in Oman, in average it was 4,000 megawatt every year on the supply side, and the demand is about 3,900. So we can see that the reserve margin is very low. It's about 10%. In fact, last year, the demand is higher than the supply. It's 4,200 megawatt compared to the supplies of only 4,000. So all this the gap can be actually plugged by the renewable energy. So what I'm saying is that it's not just for the matter that we want to increase environmental awareness, but it's good for diversification of economy, plus also empowering the economy of Oman, where we don't need, we need what do you call it? Lack of disruption in Oman. So for that, I think I'll leave it to the discussion later on how this interesting sector can be developed in Oman and through the fund and through the collaboration we have with our local partner. Thank you. Okay,
well, thank you very much, Damshal. Why don't we, at this juncture, try to take a couple of questions before the next session for any of the four panelists. Do we have any questions from the forum? Any of the four funds of interest? There must be some. Okay, in the center, do we have some microphones for, or perhaps if someone could pass one of the microphones from the stage? Okay, gentleman's coming.
My question is to Dr. Idriss regarding the fund he just talked about. It is an interesting fund. Now, we have not touched up on the exit of the fund. Basically, it seems it's a new fund, and you have mentioned that in your board there is really people who knows or they have really a background of this kind of technology. And what are you have talked about a high digit IRR. Is it possible to share with us what sort of an IRR you're looking at? And you mentioned it's a 5-year fund. So what is the exit? And basically, what kind of an IRR are you looking at? Thank you, Doctor.
Okay. Thanks. Briefly, of course, regarding the exit side. Usually, the problem when you do private equity is the options are very limited. I mean, either you IPO the company or you actually do an asset sale. What we've noticed, however, particularly for this sector, is first of all, similar funds are very limited around the world, and I would say that at least 2 or 3 which I'm aware of, or the most known, are managed by very large, like asset managers, BlackRock or KKR. Usually this is done by asset sale, because at a certain point in time when a company grows significantly, some of the clients themselves would like to acquire that technology for themselves, and so actually they go and buy out the company literally. So this is quite common. Of course, because we're talking here about mainly North American companies, the IPO market is a sort of a logic, exit for that companies. In terms now of IRR, and to be quite frank, when we were doing our due diligence, we went not to benchmark on similar funds, but we went into deal-by-deal basis to make sure that actually the fund managers are really the type of people that we are looking for. And I would say that for that particular sector, we are targeting in gross of around 35% IRR, which is abnormally high. Now, as I said, if you compare this to the sector that we're talking about, this is not very uncommon. Now, what is here, and I would say maybe I haven't spoken about the special feature of the fund, is that, as you might know, having majority control in these companies is not something easy, for one simple reason, is that some of them might be contracting to U.S. government. And this is very crucial to allow foreigners actually to control majority of those companies. So if you are, for instance, a company which is, for instance, certified to contract for the Pentagon or for one of, not even government, like so for IBM or for Boeing, be sure that the authorities won't allow anyone actually to take majority control. So this is where actually we have brought people with significant actually relationship network and with high credibility around the world to actually help us in going through that route.
Okay.
I don't know whether this answers.
No, very good. Yeah. So, Dr. Idriss, 35%, good, strong, high private equity returns, and interesting theme. Perhaps if we could take one more brief question with a concise answer would be an excellent way to close it off. Do we have any additional questions? Okay, here in the second row, if you could pass the microphone.
الفضل بن سمسان الهنائي رئيس محكمة الاستئناف بأبري. هل تجد هذه الصناديق قبولا لدى غير المسلمين؟ وكم نسبة المستثمرين غير المسلمين في هذه الصناديق؟
Have a translation for Fahad?
Yes, he's basically asking about do these funds have interest from non-Muslims, and what's the percentage?
Okay, maybe we could just go just briefly, 10 seconds each on your various funds. Obviously, Lim, your fund would not have any interest. It's a Sukuk fund, so the returns are Sharia compliant in nature. But maybe if you could each just say a word and we can close it off there.
Yes, we see interest. We already run a conventional fund on exactly the same lines. To be honest, financing trade is fairly simple to do both ways, and you get fairly similar returns.
Okay, Damshal.
Yes, I mean, as I mentioned before, our fund attracts government-to-government fund. So it can involve, the government of non-Muslim countries, but now we focus on Muslim countries. And the structure of the fund will have to be 100% Islamic.
Okay, and Dr. Idriss, conventional investors interested in your fund?
Well, definitely. This should be no issue for conventional investors. People are looking for the sector mainly. This is the key feature. Makes
sense. And Lim, final word?
I think people around the world always behave in the same manner, right? As long as the return makes sense, whether it's conventional or Islamic, people normally put the money into it. And I think one advantage of a Sukuk is that the appeal is universal because it appeals to both the Islamic investors as well as the conventional investors, as compared to a bond, for example, which only appeals to conventional investors. So to answer your question, yes, we do see a lot of demand. In fact, one of our largest subscribers is a non-Muslim into our fund.
Okay, well, very good. With that, please join me in thanking the panelists for their contribution.